Hey everyone, it's Anthony Venuto with InTouch Mortgage Solutions. It's Friday, Finance Fridays, and thank you again for tuning in for another episode. On this episode, we're going to be talking about pre-qualifications versus pre-approvals. What is better? What's better for you? Stay tuned, you don't want to miss this. If you're watching this video on the Team Sessa YouTube real estate channel, once again, thank you for clicking and thank you for your comments. Don't forget to hit the like, share, and subscribe button, hit that notification bell so you can get notified every time we post a new video. And if you want to book a free consultation with myself or Santo, you can do that in the description box below. But now, back to the video. What are the major differences between a pre-qualification and a pre-approval? For many consumers, they may not be aware that there are differences. And these differences are important, especially depending on where you are in your home buying or financing journey. For a lot of clients who want to start the journey but don't yet want to engage a real estate agent or a mortgage professional, they will lean on a pre-qualification tool found online or through many apps, much like our app that you can find in the description box below. The app will actually provide you with a detailed questionnaire and additional tools and resources to help you on your financing and home ownership journey. And these pre-qualification tools are a good point to start from, especially if you're not sure exactly when you're going to be buying. And we'll get into the reasons why that is in just a moment. But it's important to note that pre-qualification tools don't generally have a credit application. You're not actually providing a credit report. There's no review of credit or there's no review of income or employment validation. So it is up to the user to input that data correctly. And if that person doesn't input that information correctly, it will skew the numbers or the qualification amount generated in the pre-qualifier. And a lot of times clients may have an expectation set by that pre-qualification and not understand that maybe they've input that information incorrectly, such as if a person is salaried versus hourly with fluctuating hours, self-employed or salary plus commission, maybe there's additional revenue streams that you're not including or you're not including properly. That could be a big factor in why that qualification is not correct. Not to mention when it goes through the application process for credit. What types of credit debts do you have? Liabilities. You might be paying one thing, but it actually reflects differently on the credit bureau, and that's what the lender will use. So it is important to be aware of some of those distinctions. So obviously a pre-qualification tool is good to start the journey because there's no credit check, no income validation required, and it gives you the ability to get a baseline of potentially where you can be. But let's say you're ready to start the journey, to start putting in offers and actually actively hunt for a home. It is important not to provide that pre-qualification to your real estate professional, as that pre-qualification is not a pre-approval and does not hold any ground. A pre-approval is vastly different because a mortgage professional or lender will actually take the time to underwrite that deal and start to look at the documentation. Generally, when a pre-approval is initiated, an application will be completed and you'll be asked for information such as copies of your driver's license, passports, identification, employment letters or verification for employment, and such as pay stubs. You'll be required to provide T4s or notice of assessments. You might be asked for additional information depending if you have rental properties or if you receive income from other revenue streams, such as your T1 generals. You might be asked for your assessments, business license, articles of incorporation. And if you have those rental properties, they may ask for mortgage statements and property tax bills and potential lease agreements to better understand a full scope of that actual application. So obviously they will go through the process to verify that employment to ensure that the verbiage on that letter is something that a lender can support, as well as it will look at the credit report. They will have to pull a credit application in order to review the information that is provided by Equifax or TransUnion to better understand where you are when it comes to credit, what liabilities you have, and more importantly, if there's anything on that credit report that can be rectified. Sometimes we'll see clients that will have a collections from a gym membership from years ago and it was paid but it still reflects, or a lease that they returned the vehicle but the lease payment still shows. And when you submit that to a lender, you are required to address it or provide documentation. And it's important to understand credit utilization. Another aspect of the pre-approval is understanding that down payment. How much are you going to be putting down? And where are those funds located? Are they coming as a gift? Are they coming from savings and investments? Or is it coming from overseas? As generally any funds coming from abroad are required to remain in a Canadian account for a minimum of 30 days. And on top of that, the lenders, depending on the deal, if it's an insured or a conventional insurable deal, may be required to ask for 30 to 90 days of down payment history where they will want to source it. So that is important to understand, as down payment plays a very important role in the timelines of when you're going to be closing or potentially close on this purchase. Now, in addition to all this is looking at the entire picture. Are you able to qualify for the amount that you so desire? Or will we need to add a cosigner or a guarantor to the deal? And if so, do we have that documentation in order to give you a baseline of how much you can qualify for? So these are important elements that are required during the pre-approval process, and working with someone who has experience in this information or dealing with this information will prove to be invaluable, because of the fact that if there is a discrepancy, most lenders will not underwrite that information or look at those documents until the deal goes live. What the lenders usually do with that pre-approval or that pre-approval certificate is issue a rate hold for anywhere from 60 to 120 days. And in that documentation, it will note that conditions apply, such as the review of updated documentation, and more importantly, the appraisal. So even with a broker going through all the documentation, they may be able to make sure that your income, down payment, and credit are all bulletproof, all that employment is verified. But the one element that will remain is the actual appraisal or the subject property. And that is obviously a conversation you want to have during the pre-approval process, especially now in this market where home prices are very volatile and interest rates are elevated. So understanding all those nuances is very, very important. There are so many different components to that pre-approval that it is important for viewers as well as buyers and potential clients who are looking to go out there and buy, that they should understand the difference. A pre-approval is where you want to be and what you want to have when you're ready to start your financing journey. And it's important to note that with most brokers, there is no cost associated to actually go through the pre-approval process. So it is important to note that there is a no-cost obligation to actually get a pre-approval done. But if you're going to be doing a pre-approval, it's very important to note that with the credit, that you don't want to be shopping around with different lenders. And the reason behind that is not because we don't want you to get a good deal, but because each time you go to a different lender, they may require a credit check or application to be completed. When you work with a mortgage professional, we can complete one application with one credit check, which we can take and shop around with multiple different lenders. So you don't actually have to go out there and pull a credit each and every time. And that could be detrimental to your actual credit rating. So it's important to understand these particular nuances. Now, if you have any questions about going out there to purchase a home or getting pre-approved or pre-qualified, please feel free to reach out to our team here at InTouch Mortgage Solutions. We'll be more than happy to help you and accommodate. And if you like the content that we're producing here on Finance Fridays at InTouch Mortgage Solutions, do us a favor, hit the like, share, and subscribe button, and hit that notification bell so that you can get notified every time we post a new video. And if you know someone that might benefit from this content about pre-approvals and pre-qualifications, feel free to share the video with them to help educate them and provide that financial literacy. But we'll leave the video here. We thank everybody for watching. We thank everybody for clicking. Have a great Friday and an even better weekend ahead. Thanks for watching.